Bond bottom. By the market ear. Tuesday, October 10th, 2023, 5:07. And it is gone. And just like that, almost all of October's bond bear is gone. Yields drop to unwind this month's spike. This is the biggest move lower in yields since the SVB crisis in March. Source: Refinitiv. Bond bottom. Bonds have likely bottomed with back-to-back weeks of record volume and capitulation, says BTIG. Source: BTIG. Madoff's rates perfection. Treasury futures put in the biggest up candle in a long time. The negative trend remains intact, but note we never tried the lower part of the channel this time. 21-day is the first resistance to watch. A close above it and the upper part of the channel highs comes into play. The 50-day is still way higher, but are we ready for some painful reversals in yields? Source: Refinitiv. It has been a brutal bear. Long-term treasuries had fallen more than 45% from peak. Source: Bloomberg. 800-day anniversary. Monday was the 800th trading day, around 3 years and 2 months, since TLT's all-time high on August 4, 2020, and it has fallen 50% since. Friday, the 799th trading day, marked the post-peak low so far, down 51%. The current bear market in long-term treasuries has persisted far longer than the S&P's swoon during the early 2000s dot-com blow-up and late 2000s financial crisis. Source: DataTrek. Overshooting. The current level of bond yields is well above what is implied based on market expectations of inflation. Source: JP Morgan. The fundamental case for lower yields. JP Morgan sees yields moving lower from here. Main bullets are: 1. Despite the rise in oil prices possibly pushing inflation, JP Morgan believe current rising bond yields are unsustainable. 2. Historically, oil and bond yields have had a positive correlation. The recent oil price surge is mainly due to supply reasons, potentially leading to deflation. 3. Past 8 Fed tightening cycles show bond yields decrease post the final hike, by an average of 100 BP. 4. Current bond yields are trading above both inflation forwards and expected levels. Source: JP Morgan. Bond convexity. The crowd has traded the trend one way. Things could get squeezy if momentum chasers like the CTA crowd start chasing this move. Source: GS. Bond vol. For the first time in nearly half a century, U.S. Treasuries are now more volatile than gold. Source: Crescat. 1.